It has been an absolutely brutal end to the week. We're seeing red across the board, and, there's that feeling of real panic in the air. But underneath all that chaos, there's a massive power struggle playing out. So let's dive into this and figure out who is really calling the shots.
Take a look at this number, $258 million. That's how much worth of leveraged crypto positions got completely wiped out in just 4 hours. $250 million just gone. That's the kind of volatility we're dealing with, and it really sets the stage for the high-stakes game that's unfolding right now.
All right, so here's our game plan. We're going to break down the crash itself, then we'll uncover who the market's real boss is. We'll look at how Bitcoin is performing under all this pressure, and finally, what key signals you need to be watching for over this very uncertain weekend.
Okay, first up, the damage report. And it is so important to understand this was not just a crypto problem. No way. The fear was contagious, and it ripped through pretty much every corner of the financial world.
You can really see just how interconnected everything is right here. Bitcoin losing that critical $68,000 floor? Well, that happened as the S&P 500 was bleeding out $3.5 trillion in less than a month. And with geopolitical tensions escalating around Iran, investors did exactly what you'd expect. They ran for the exits, dumping any risky assets before a weekend where, frankly, anything could happen.
So, this brings us to a really fascinating question. With all this panic, you'd think some reassuring words from the top would help, right? We heard official statements designed to calm everyone down. So, why didn't it work? Why does it feel like nobody's listening anymore?
On paper, this should have been great news. A 10-day truce. A pause. This was a clear attempt to tell the markets, hey, we've got this under control. Just relax. But the market's reaction told a very, very different story. Okay, now look at this timeline. The announcement hits, and for a split second, it works. Bam! Oil prices plunge. But just 40 minutes later, that relief rally was completely gone. Poof! The market basically just shrugged. It's becoming insensitive to headlines, which, begs the question.
I mean, think about it. If the words of a president can't hold the market's attention for even an hour, it means a more powerful, a more fundamental force is at play here. And that force is the one that truly has politicians cornered.
And the answer is the U.S. bond market. That's the real boss. It's the ultimate judge of risk in the system. The best way to think about it is like the financial system's plumbing. When that gets stressed, everything else, all the other markets, they start to break. Rising yields are like a flashing red light on the dashboard, telling you the cost of debt is getting dangerously high.
And this chart, wow. This really puts the problem into perspective. The yield on the 10-year bond hasn't just gone up a little bit. It is screaming towards that 5% crisis level. Now, this is the zone where historically, politicians and central banks are forced to act, whether they want to or not. They are just running out of road.
Honestly, this quote just sums it all up perfectly. The bond market isn't making suggestions anymore, it's making demands. The invisible hand has become an iron fist, and right now it's squeezing the entire global economy. Political tweets just can't fight this kind of pressure.
So, with the traditional system under so much stress, how is the ultimate outside asset, Bitcoin, holding up? Is this digital gold idea finally being put to the ultimate test? Let's take a look.
Historically, the data is actually kind of surprising. If you look at major geopolitical events over the last 6 years, Bitcoin has often outperformed not just the S&P 500, but even traditional safe havens like gold. While stocks tend to fall and oil is all over the place, Bitcoin has shown this really interesting pattern of resilience.
And that all leads to this core thesis. When things get really uncertain on the world stage, and when faith in those traditional systems starts to waver, capital naturally looks for an exit. It starts searching for assets that are seen as being beyond the reach of any one government or any single central bank's control. So, what should we actually be watching for as we head into this really pivotal weekend? Well, the data is showing a fascinating tug-of-war that's taking place right now. So on one side, you've got your short-term speculators. They are piling on the bearish bets, they're convinced the price has further to fall, and we can see this because open interest, which is basically the total number of active bets on future price, is going up as the price is going down. But on the other side, the long-term holders are doing the exact opposite. Their selling pressure has pretty much collapsed. That suggests the weak hands have already folded, and the investors who are left are much, much less likely to panic sell. So these are the battle lines for the coming week. $68,000 has officially gone from being the floor to the new ceiling. That's the first wall we have to break through. 65,500 is the immediate floor that has to hold. And if it doesn't, well, you can expect a major fight in that $62,000 to $64,000 zone, because that's where a ton of buying and selling power is just sitting there waiting.
And this chart, this right here, shows the biggest shift in the entire market. I mean, just a few weeks ago, the only debate was about how many times the Fed was going to cut rates. Now, the market is pricing in a nearly 50-50 chance of a rate hike by early 2027. That is a seismic, fundamental change in expectations, and it's being driven almost entirely by the pressure from the bond market.
And that leaves us with the ultimate question for the week ahead, right? We have the unstoppable force of the bond market pushing the global economy to a breaking point. In that kind of environment, does capital flee to Bitcoin as the ultimate safe harbor? Or, in a true crisis, does everything just get sold off together? The next few days could finally give us the answer.